Hello and welcome to Scrolling with Ceazor. Today is May 1st, 2026. As always, I've got news for you, but it's not financial advice. So let's take a quick look at the charts. Things are looking green today, but not excitingly green, just normal green. It's always good to have a little bounce around, like especially if you're providing liquidity in range, then you're getting lots of decent trading fees, or at least you're supplying whatever system you are supplying your coins to, your liquidity to, is generating revenue through that system, through the various flywheels and so forth. So ETH is up about 2%, BTC is up about 2.5%, gold is up less than 1%, about 0.5%. Sonic is up 2.5%, but doesn't look too wonderful yet. Hype is up 3%, but again, still within its range, still down on the week, so to speak. And that's it. So let's move on to the news, the tweets. So in no particular order here, the first one I have here is Millie. Millie is basically tweeting out the idea that Polymarket is still using UMA as their oracle. Now, UMA has proven time and time again that they are biased in their decisions because the UMA holders tend to also be the bettors, and they don't want to lose their bets, so they sway things that are in the gray towards their bets. Basically, that's the stipulation here, or the speculation on behalf of Millie. And he's like it says here, my bookmarks are full of inconsistent and unsatisfactory resolutions. So yesterday I covered the fact that the first dispute went to vote on True Market, and there's still about 24 hours on that before that book can be fully closed on the dispute. The voting did happen, but they can still dispute again and send it to the jury of attesters. It's a pretty cool system. I do have a video if you want to know more about it, but I think it's probably the best system out there right now for making these poly markets like actually trustable, these prediction markets in the way that they should be trustable, and you can depend on the outcome being the truth in that sense. So let's move on. So Frax Finance is, again, basically take a look at this tweet, okay? So if you put FRX USD into EtherFi and use it with your credit card as spending, then A, you're getting your APR. So FRX USD will give you about 3% APR on your deposits inside the EtherFi Vault, the credit card EtherFi Vault. But if you start using FRX USD as your payment coin, then you get submitted for this reward system. And if you look here, this one whale spent over $6,000 in FX USD last week, and he won $500. Can you imagine that? You go out and you spend like $6,000 because that's what you want to buy. You want to buy something, you're spending that money, right? And then the system just instantly gives you $500 for that. Now, of course, it's a competition. So if everyone was spending $6,000, then he might not win, right? So it's a lottery in that sense. But there are like some small wins for some small ones as well. So 10 people can win about $50, and the biggest one will win about $500. But that's pretty cool, I think. I think that's pretty fun, and I think it's definitely product market fit for both of these projects, Frax and EtherFi here. So moving on, so here we have Liquidity. Liquidity is retweeted this guy, DeFi Milos. He's a new person to me. I gave him a follow, so he's a new YouTuber come to the space. He's got like 300 followers. He does these, like, if you check out his video, it's like it's pretty like grassroots in that sense. Like if I'm gonna click it open, and then you can kind of see a little bit. So like you might consider it to be like not flashy and not exciting, and you know, it's definitely not a YouTube short, right? But it's well done. Like he did his homework, and he's going through and he's teaching you in about 18 minutes how the entire system of Liquidity works. And I think it's worth supporting these kinds of newer YouTubers that are actually trying to teach people what things are, instead of just say, oh, go buy this token. You know, go buy this token, it's going to moon. You know what I mean? So I've given him some support, and I'm going to follow him. and I'll subscribe to his channel as well when I have some time with my YouTube. Okay, so let's. So anyway, so he's explaining Liquidity, a bold stable coin, and I'm always going to show it like it's the good stuff, right? Moving on. So Binigi has retweeted out that Arbitrum DAO now has an active snapshot for the release of the frozen ETH for the Kelp DAO Layer 0 hack thing, right? So as you can see, it's a big contribution, a big co-authored by Aave, Kelp, Layer 0, EtherFi, Compound, and they're all working together to try to plug that hole up that the hacker last week and so forth gave. So if you are an Arbitrum token delegate, you can go and vote now. I've submitted my vote, of course, but it's great. Like what Benji's saying here, he loves how all of this is happening out in the open. So people can debate whether or not the freeze was correct or not, but the actual idea that the DAO is voting on actually unfreezing these tokens and sending these tokens to the recovery efforts, and it's all being done permissionlessly out in the open, so everyone can see the proposal and stuff like that. But yeah, so check it out. So over to the mega drop, mega token airdrop or go live type thing. So here we have a long tweet by Ardenix, and he's basically talking about the KPI metric. Now you can get into here and read all of these little points here. There's quite a bit, right? But basically the idea is that if you did commit some of your mega tokens like Igneous, I mentioned it yesterday. I tweeted out myself that I think you should consider this, right? And maybe with some of the mega tokens, my mega token supply, my mega token rewards are now more than what I was going to have. The amount I staked or committed is less than what my potential rewards are if these KPI metrics are met. So yeah, read through this and you get a deeper understanding of all the KPI metrics and stuff like that. It's not all wonderful and greatness. There's still risk here, okay? There's still quite a bit of risk, and I'll kind of get into some of that in the next tweet, okay? So first of all, there's quite a bit of FUD going around by this one DEX on, it's called Kumbaya, is the major DEX on Mega ETH. And they set their fees, their LP fees, to 50%. So Kumbaya was basically taking 50% of the trading fees from everyone who supplied liquidity for yesterday. And the problem is it wasn't documented. It wasn't shown in the front end. It wasn't transparent that when you deposit in here, you're giving up 50% of your fees. So there's a lot of talk of this. There's a lot of people talking about how this is unfair, this is not good, this is it's extraction, right? So that's what I'm saying. There's the good and then there's the bad right now. Then there always will be with these kinds of things. Now, what's the best thing to do? I don't know. I can only play the game and hope that I win and try my best to make my decisions based on the information that comes to me. Moving on. So here we have Lemon Child. He's talking about Mega ETH launch as well, but he's talking about it in a much different way. Okay, so basically, he says he spent months defending Mega ETH's vision. He is shilling it, being a KOL, talking about it. And then somehow, when he finally got his tokens, they were immediately stolen. So some phishing ability, some phishing laid in wait for him to get tokens. And then when those tokens landed, they drained them. So I don't know how he got this, his private key exploited or, taken over or what happens, but basically within seconds. So he some bot had his key and was waiting for money to drop and then just stole it all. Okay. So there's probably quite a bit going around of people with the same kind of ideas or the same kind of situation. So stay safe and stay hard and be careful about what you're clicking and stuff like that. Moving on. So yesterday I talked about this Nikita XBT AI agent that you can launch a version of this thing via the Anon AI agent Launchpad. Now, I haven't quite done this yet, but today I was starting to look at what is this Nikita XBT doing, and I found some tweets. This tweet here is one example of him kind of like laying out the sentiment of his information based on the Anon token. So, sentiment cautiously bullish, Launchpad live, 30K Anon per agent. So, there is a cost of, 30K Anon to deploy an agent. So that's good for the token, right? I don't know what this is. This is Daniel's last name, right? Cred. So, he's got some cred in the space. But community wants proof, no verifiable buyback burn mechanism. So there's no contracts to do that. Liquidity friction on Pandora. So yeah, it's difficult for Pandora to get liquidity. And then flip it, visible agents launches, fee capture. So as you can see, it's doing okay. It's giving you a lot of little details. It's not well laid out in a long readable format, but you can kind of dig through there and get those little nuggets of information from its research. Now, I got to do more homework. Everybody, we should check this thing out a little bit more especially before we decide to mint one of these things or so forth, test it out and stuff like that. But 30K Anon is not very much money right now, so it might be a good time to test it out. Moving on, here we have Clouded of ETH Strategy. He tweeted out this today. He's like, stocks are adding 200 billion to their market caps in one day right now. Crypto should be pulling 100x's, to be honest. And I agree. Like, if stocks can moon, then why can't crypto moon? Like, stocks already huge. Like, and I don't think he's talking about penny stocks. I think this 200 billion is something like maybe the S&P. I don't know which stocks he means. It definitely doesn't. Maybe he means the entire the stock exchange, right? $200 billion just went into it, and all these things just went up in value, like prices. So I don't know. But I do agree. I hope crypto can follow suit and start pumping as well. But I'm okay with sideways action as well because I'm farming fees. But I do want it to pump, of course. Okay, so Jesse here is talking a little bit about why did Base launch Mega Token. Mega ETH is basically a competitor to Base, but he's like, yeah, well, he goes into a lot here and talks about, well, first of all, we want Base to be a place where people can like put their assets. Like if you want to speculate and you're bullish on Mega ETH, maybe you can just buy a Mega ETH on Base and hold it there. I personally would never do that because I would much rather buy it on Mega ETH and use it on Mega ETH to farm more Mega, right? Why would I just hold spot Mega on Base? But then he goes into the talks of like, because Base is connected to Coinbase, now Coinbase can easily access this Mega token and supply Coinbase users with the Mega token opportunities, whatever they might be, right? So that's kind of cool, and I kind of agree with him. But I do think most of it is because Mega is currently in the news. It currently is the hype, and there's volume to be had. And you bring it over, put it on Aerodrome, farm some fees. Of course, it makes a lot of sense that way. Okay, moving on. So speaking of fees and liquidity pools, here we have North talking about Ramses. And again, so Ramses, 5 weeks, 5x of fees since the last week. How do I get XRAM? So he's talking about XRAM and explaining to how you get XRAM and stuff like that. But the key point here is that, the fees have gone up. And consistently, fees are more than inflation of RAM tokens. So that's great. That's what we want to see. That's what a DEX needs to do. It needs to generate more revenue or more fees than it pays for with incentives, right? And that's basically what keeps happening with this. Now, a key aspect of XRAM is that you're not locking up. Like if you use Aerodrome, then you're locking your tokens for 4 years in order to access those fees. But here you can exit any time. Like it is a liquid, locking token. So, you have to, there's a peg to be considered here, right? When you want to sell, right? But it's still worth considering. It's pretty easy to get out. These are fungible XRAM tokens that represent voting power. Okay, moving on. So DeFi Dr. DeFi, is talking about Flying Tulip, and Flying Tulips basically just burned a shit ton, 410,000 FT tokens burned. That's a value of about $30,000 just in one little transaction burn. So yeah, it continues to buy and burn, and it's also buying and incentivizing. So it might be burning. I'm not sure if it's 50-50. I'd have to double check, but let's say it is 50-50. So 30,000 were bought and burned, and 30,000 were bought and used to incentivize people to use the protocol. There's no inflation on this token. It's all being done. All the fees are being used. Every single generated fee and revenue is all being used to buy the FT token, and some of those tokens are burned, and some of those tokens are sent as revenue to people who, if they want stablecoins, then they have to sell out, and that generates more fees for the liquidity providers. Okay, moving on. So UMA is celebrating something that I think deserves celebration, especially for me because I got bags and I care about this. But 25 million Ethereum blocks with zero downtime for around 11 years. So we just hit 25 million blocks. Awesome. Thanks for sharing that, Otman. Last tweet of the day is a gloomy one. When AI hits security, there will be signs. So AI has come. It's quite accessible. It's all over the place. AI is scanning all of the old contracts, looking for little exploits, even the unverified ones, and it's emptying tokens out of these exploitable contracts that before it required a human to spend time to manually check and look and hunt. But now the AI agents are never sleeping, just constantly scanning one contract at a time, boom, 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 and looking for exploit vectors. And as you can see, the amount of exploits is growing and growing and growing. And it's a little bit scary, but it is what we live in. This is the world we're living in now. The only thing we can do is embrace it and try our best to use AI to help us to avoid AIs being able to hack us. Now, I'm not saying you should depend 100% on code deployed and coded and worked on by AI, but you can definitely use AI to enrich your security checking system. I use AI frequently, and I find a lot of problems with it to make code. It likes to go into these weird loops where it's like you fix problem A, and now you have problem B. And then you ask the AI, fix problem B, and it reverts back, brings back problem A. And in A, B, C, it's just like constantly like this loop where you're getting into like, fix this, but break this again, and fix that, but break this again. It's just like on and on and on. So it's still dangerous, but at the same time, like if you code it, you read it, you understand your code, you get peer review, and you send it through AI, and then you maybe even send it to an auditing firm or an auditing contest, then you're just adding more layers of checking into it. And I have found that AI is pretty good at like, hey, I've done all this code. Can you look at it and see if I've got any logical errors or if I have any exploit vectors? And sometimes it does find a few little things you've missed. Okay, so let's just don't let it to recode or write the entire code for you, or even just don't say here's all my code. Find any mistakes and fix them, and then give me all the code back. Don't do that either. Just ask it to find mistakes and tell you what the mistakes are, and then you manually fix them based on its explanations. Okay, so that's it for today. I hope this is interesting. Thank you and goodbye.